This is Jack Kramer. We're happy to be here in Times Square. Also here with Nick Martell. We're the two co-founders of MarketSnacks, which is the millennial voice of business and financial news. So we create a daily newsletter every day that summarizes everything you need to know about Wall Street and business news. And we do it in a clear, concise, and entertaining format.
Exactly. So we're covering the stocks that you actually care about in a way that you can actually understand, and we're doing it on a daily basis.
Yeah, Nick and I, we both do this outside of our day job, so it's our side hustle, and we've expanded it kind of outside our 9 to 5, and yeah.
We're excited to be here. Happy earnings week
Thank
to
you,
Jack.
Nick.
Yeah,
Very
good to see you for that.
Week 2 of earnings season. We've actually liked this week a lot better than last. Last week they had steel stocks and banking stocks.
Not as much fun.
Yeah, I mean, I don't even bench press anymore, so the steel stocks aren't as relevant for me these days.
But the fun stuff we have going on right now is you got your food and beverage this week. So you've got Domino's Pizza. You've got Starbucks reporting earnings. You've got Dunkin' Donuts reporting earnings.
Yeah.
You've got Boston Beer Company behind Sam Adams. They're going to be reporting earnings too.
Yeah, you also have big tech.
True.
So yesterday Yahoo reported, Netflix reported. So I think kind of this is more the meat and potatoes of our kind of earnings season.
Yeah, we like this kind of stuff. But we're going to start off today really with kind of a throwback, toy throwback. Picture Christmas about 1996. Top choice for a toy is Nerf. You wanted that Nerf like whistling football.
Yeah, the
right?
beach football.
And that's made by Hasbro. And Hasbro reported earnings yesterday. So the cool thing about Hasbro was incredible earnings story. Revenues jumped about 10% from the previous year to about $880 million on the quarter. But the stock dropped over 6% on Monday.
Their shares are already up 20% this year, so expectations were ridiculously high. But the big reason for the stock drop was the loss of their licensing deal with Jurassic Park, the company owned by Universal. So it's funny, Hasbro has sort of been nicknamed these days the Disney toy company because they have the deal to do all of Disney's toys, which is, of course, a massive moneymaker. I mean, you got Star Wars with the new DD8 bot replacing R2-D2.
True.
You got the Frozen franchise, which was, of course, a ridiculous hit the past 2 years. And last but not least at all, the Disney princesses, Ariel, Snow White, etc. Yeah. So they've taken over that side of things. And then the big competitor, Mattel.
Crazy breaking news story this morning. After Hasbro loses Jurassic Park yesterday, Mattel snags that licensing deal right from their hands this morning.
Yeah, so it's really interesting to see these two companies competing for what movie studios they get the exclusive deals with. So Hasbro also has DC Comics, and Mattel has Marvel. Mattel also has more of the Universal deals. So it's really interesting to see how movies have completely transcended the movie theater and are basically taking over the toy industry like we're taking over Nasdaq Live right now.
Exactly. But these are, I mean, you got to picture these two toy companies as like little kids in a sandbox fighting over these exact toys. But the interesting thing, I think, too, about the industry in general is that 3 years ago, analysts were saying, look, all kids want to do is play with their mom and dad's little iPhone on some random game as they punch their fingers on it. And there's going to be a decline in the size of the market for toys. But what's kind of come about through these last few earnings from Hasbro and even Mattel is that the market for toys continues to grow. I think sales for both or overall were 6% in the last year. So kids still want these like physical things. They want to unwrap stuff they can pull out of a stocking.
And these companies are being innovative. We just heard an anecdote from one of the producers here. They're creating 3D heads of Nick Martell, which you can plop on top of a Star Wars Jedi, for example. So
exactly.
It's pretty fun. Yeah, kids are getting away from screens back to like the toys you and I used to play with. So.
Right.
Pretty interesting.
So that's the toys, and that's a fun one from yesterday. But on a more serious note, but a really fascinating tech one, we've got Yahoo.
Yeah. Yahoo, the tech company of our grandparents and our parents. The company, as most of you know, since February, they publicly stated they want to be sold. So they're trying to sell their core assets, which include their internet search engine, their email, their internet ad sales, even their fantasy football stuff. So this could be their last earnings report that came out yesterday as an independent company. And they beat earnings and they beat revenues if you exclude one enormous item, which was the massive tumble that happened yesterday. They announced that they were writing down the value of Tumblr, the blog site for everything, by $488 million. So that one item created an enormous loss for the company. So its swan song wasn't exactly positive.
Right. And there's kind of a personal element to this, too, in that this was kind of a key acquisition for CEO Marissa Mayer. And this was something she had kind of banked in addition to a lot of the other acquisitions Yahoo has made. The
Katie Couric acquisition.
Exactly.
And the acquisition of a couple NFL football games last year. So none of these have really had any traction. But the sad thing about the Tumblr acquisition is that it was $1.1 billion acquired in 2013. And when companies write down the values of assets like they did yesterday with Tumblr, it's basically a public recognition that they paid too much for it. And it's not worth what they thought it was worth.
Right.
So the value of that has been written down by half. So the company is now operating in this sort of lame duck session, and it's completely distracted by the sale.
Final bids were due yesterday for this, and the expectation really is that the bids are going to range from $3 to a little over $5 billion. But you've got some interesting bidders too. I mean, Warren Buffett's actually put together an investment group that's made a bid here, but the top dog is really Verizon.
Right.
I mean, Verizon wants to eat this up.
Right. Dan Gilbert, the founder of Quicken Loans, also has a group of investors that might be interested in these internet assets, and they still have value. I mean, 43 million people visit Yahoo and their sites every day. Video somehow gets 200 million viewers a week. A month. So there's a lot of ad dollars that could be generated there, but right now, with this enormous elephant in the room, which is the acquisition, they're not able to get as much traction on ad dollars.
Great.
The other thing I think we should mention is the Alibaba Holdings, which represent the massive part of the value of Yahoo. Was barely even mentioned in yesterday's earnings report. So the one part that shareholders actually care about, which is the massive stake, I think it's about 16% of Alibaba, which Yahoo made a strategic acquisition in like the mid-2000s, was barely even mentioned. So kind of a distracted earnings report yesterday.
And then if you want to take it a step further too, if you look at Alibaba, a fascinating company based in China, just an e-commerce giant. The criticism of Alibaba recently from shareholders has been that they've been getting too into just acquiring random companies. I mean, Alibaba's been grabbing these kind of local Southeast Asian food delivery services. They're grabbing these smaller e-commerce firms in Southeast Asia. So they're kind of getting into the same acquisition binge that Yahoo did. Obviously, different scenarios for both, but interesting to see that the strategies have both come under some criticism.
Yeah, I just hope that this fall Yahoo continues its fantasy football program because I have a draft in August.
Yeah, that's big.
But besides that.
And we did have a draft strategy session kind of yesterday at dinner with some of our friends, so it's never too early to be thinking.
So the third company we want to talk about today is Starbucks, which seems to be constantly in the news. They're as present in the news as they are on New York City street corners.
Every single street corner, every single headline is Starbucks the last like 3 months.
Yeah.
And it goes back to earlier this spring. So really, I remember the first story that came out that was starting this Starbucks trend of the spring 2016 was the fact that they were introducing the nitro brews. So there's like Guinness-like
nitrogen
brews,
infused,
tapped. You get it. You kind of feel cooler. Like they're big in Brooklyn kind of thing. The bearded guy likes giving it to you. Everyone enjoys these beverages.
You create a coffee mustache for the first time.
Tastes more like a milkshake.
You don't drink it on ice. You don't drink it with milk. You drink it black. It's kind of the cool place to be. So that was the first thing that happened.
That was the first thing. Then you had the change in how they were going to deal with their loyalty program. Yeah. So, for example, if your girlfriend like mine is a huge Starbucks loyalty program fan, this was something that affected how they're going to be shopping. You'd think, and that's what analysts expected. In fact, it didn't really change anything. Basically, it was just to the betterment of Starbucks. They were going to be changing how you get points, how you'd get benefits by going to Starbucks more frequently as opposed to spending more.
Right. So instead of ordering 3 coffees for you and your 2 colleagues and making 3 separate transactions so that you get 3 times the points, you can actually just make one purchase and stop annoying the people in the back of the line.
And now tell us what happened in June that was kind of random and frustrating for Starbucks.
Well, first, last week, less relevant for you and I, kind of the customers, but more relevant for the employees. They announced they were going to raise the wages of baristas by at least 5%, up to 15%. And this is funny, it's a reflection of kind of a solid economy, and it's peer pressure in the best way. So I think the first movers on kind of increasing the minimum wage for the company was Walmart, which last year announced that they were going to raise the wages to, I think, at least $10 an hour, which is far above like the federal minimum.
Right.
Then McDonald's did the same thing. Target did the same thing. And if Starbucks wants to keep people, the best people working there, and I don't want to order a coffee from someone who's, a frustrated barista, they finally announced they were following suit.
And this
last week
wasn't like in a vacuum. Like it's not like this adjustment came kind of out of nowhere. Starbucks just suddenly started to decide to pay people more. I mean, this comes right after they, for the 3rd year in a row, 3rd July in a row, upped the prices of coffees, certain coffees, by up to like 30 cents or so.
Yeah, so they accidentally did that prematurely by
So
like
you
a
like
week.
go into a Starbucks, and then if you're a Starbucks fiend, you like quickly recognize you're getting paid, you're paying 30 cents more, and we're like, what the hell is happening here? And then it turned out the baristas didn't even know that there was a price increase coming, and then Starbucks had to apologize for this, and then a week later, like, made the whole thing official.
Starbucks is everywhere. Last story that happened also last week was that the company is loosening their dress code for baristas due to feedback from baristas who are tired of just wearing black pants and a black shirt and a black hat. So the new policy is, well, this isn't officially announced, I shouldn't say that, but I think they're moving towards wear whatever you want as long as you have the green apron in front of you.
Gotta have the green.
Covering everything you're wearing up.
Right.
So.
But there are a couple more too from this week as we get ahead of the Starbucks earnings. So Starbucks is going to be reporting earnings on Thursday. Like we said, kind of everyone in the food and beverage spaces, Dunkin' Donuts, Starbucks, Domino's Pizza, Boston Beer. But some interesting stories that Starbucks trickled out this week as well. First, they're going to be including their mobile payment option at Starbucks in China, which is big. And then the second one, kind of related to international, is this Starbucks acquisition of a small, random Italian kind of bakery. Yeah. You get the cute little biscotti and espresso. Think like total classic Italy. They've got locations in Milan. They've got locations in London. And Starbucks, undisclosed amount, but just bought the mini chain.
Yeah. You really need a checklist to remember all those Starbucks stories.
Right.
They're also expanding, creating kind of a premium brand of coffee shop. They have, you might notice in grocery stores, they have Reserve, Starbucks Reserve, which is like Sumatra and other exotic, more expensive coffee beans. Yeah. And they're actually going to open up a chain of these coffee shops, which is kind of an elite Starbucks.
Very, very
a very posh
fancy
Starbucks.
Yeah.
Yeah, we're not sure about this idea. I mean, in my opinion, don't fix it if it ain't broke. I love Starbucks. I go there when I need free Wi-Fi, free bathroom, or coffee that's not watered down.
Right.
Last night we had dinner in Chinatown with a couple of our buddies, and I got out of the subway at East Broadway and looked at my app, was expecting to chill for an hour at Starbucks.
Desert.
It was a Starbucks desert, nothing within a half mile. I was really disappointed and quite disturbed. Anyway, they have it down. They're constantly innovating their coffee shops. Yeah. Why create this new brand of kind of elite coffee?
Well, here's the funny thing about this brand that I think is kind of messing with things. When you think elite, obnoxious, Williamsburg-based, bearded guys making the coffee, spending hours crafting this brew with some random machines, you're thinking small shop in Brooklyn. The funny thing about this brand is that it's going to be that style coffee, the intense, super special, exotic brands you described, except it's going to be in a bigger space than your traditional Starbucks. So they're kind of messing with this idea of craft coffee, but using it on a Starbucks scale with a bigger than Starbucks size. So this is kind of a random, interesting brand transition.
Yeah. Yeah. My cousin in Seattle would be really disappointed at your Williamsburg comment.
I know. I've made 2 of them thus far, but I just feel like it really makes sense.
New York state of mind.
We're happy to have been here, though, for Nasdaq, and I think we've got some exciting stories for MarketSnacks next week and this week, too.
Yeah.
Earnings season continues. We named all those food and beverage brands. We got the tech stories you're going to want to hear about with the Microsoft earnings later today, as well as eBay reporting later this week, too.
Yeah, go to marketsnacks.com, sign up with your email address. Next week, we'll also be covering Facebook, Twitter, Apple, kind of the companies that you deal with every day, the companies that are defining the business trends, and the companies that are entertaining.
And we're excited to come back to Nasdaq. Great time to be here, and thanks so much, Brad. Thanks, guys, for hosting us.